a culinary landmark is fighting to survive.
In a scramble to keep the U.S. economy on life support during an international pandemic.
Perhaps my restaurant's in ICU, and right now it's on a ventilator.
Congress launched the Paycheck Protection Program, a business bailout meant to keep workers paid while businesses shut down.
Initial reaction is shock. I'm furious.
Now, the 12 News I-Team is taking a closer look at what companies took in the most cash and how they intend to use it.
You don't want to be on camera? No.
As Congress continues funding the program, some critics and small business owners demand more oversight and restrictions. This is everything you need to know about the Paycheck Protection Program. I'm Katie Wilcox, the I-Team executive producer, and joining me today is investigative reporter Joe Dana.
Well, Katie, first quick context. If you remember 2007, 2008 during the housing crisis, the government came in with some programs to try to aid businesses, provide shovel-ready funding, for example, for projects. We heard over and over then that the paperwork was onerous, that there was too much red tape, it was too difficult to just get cash in hand. So this time around with the PPP program, you could say the pendulum swung way on the other side. This was $525 billion shoveled out to small businesses very quickly. 5 million businesses benefited from it so far. And look, it's meant to help businesses keep employees on the payroll. That's the purpose. It's also meant for expenses like mortgages and utilities.
This wasn't a very controversial program to begin with. You know, what's at stake if these small businesses shut down or didn't get the funds?
It was sold on the floor of Congress over and over as a rescue line to small businesses, especially when you talk about the restaurants and the hotels and the salons that suddenly had to shut down completely. I mean, they were stranded, and small businesses are considered, the lifeblood of the economy. They produce about half of the GDP.
I think that the government's position in here was to err on the side of, hey, let's just get these dollars out, into the economy.
And so the U.S. took this stance differently than many countries, which simply stepped in and paid the payrolls of employees of businesses. What the U.S. decided to do was give a certain amount of money to businesses that applied and allowed those businesses to do what they wanted with it. 60% is supposed to go to payroll, and then it's also supposed to help for other types of expenses. So businesses have more flexibility with PPP than, say, maybe businesses in other countries.
So PPP, Paycheck Protection Program, but what you're saying is not all of the money has to go to payroll.
Right, and that's part of the problem, I think, is because there are questions about how accountable these companies will be. My very fiscally responsible mother asked me when I was first talking to her about PPP, she said, where does this money actually come from? This $500 billion. And it comes from us, the taxpayers. It is more national debt. And so this is all a big social contract between us, the taxpayers, and the business owners. And that's why there were so many alarm bells that went off when the money was gone over one weekend when the program started.
What was the explanation that you got from Wells Fargo about why it was just gone?
They said it was hugely popular. I mean, for good reason. We know a lot of these businesses were desperate. And so, yeah, it went fast. And that's why we had several businesses saying, look, and nonprofits, keep in mind, there's so many charities and nonprofits out there that were also suffering. They were saying, we've barely had a chance to breathe, and we just got a hold of our bank, and they've already told us the money's gone. What's next?
Tell me, what did those smaller businesses tell you about the program and about how it's working?
Yeah, and this is the part that is hard, kind of gut-wrenching when you're doing this type of work, because we talked to owners of 3 different businesses and nonprofits here in Arizona. They were unsuccessful the first time around. They were scratching and clawing to figure out ways to just survive. All 3 of them did end up getting money in the second round, which is great. 2 of them said they got less than what they really needed. One of them, Barrio Cafe, is an iconic Mexican cuisine restaurant, 18 years in running. They had a second location. They've had to close that since the pandemic started. They've had to cut 3/4 of their staff. They're right now on a ventilator.
Who am I? I'm just a chef. I create pretty things, delicious things. I study my culture and my cuisine, not epidemics.
2 of the 3 small businesses we spoke with are minority owned. run in low-income areas. And something that's important about the CARES Act is that it directs the SBA to actually instruct lenders that they were supposed to prioritize businesses in underserved communities, also minority and women-owned businesses, and businesses that had been operating for less than 2 years. That's not happening. It didn't happen. Lenders were not given those instructions. And so, as we've talked to some lawmakers, Senator Kyrsten Sinema, for example, she recently introduced a bill which would include demographic questionnaires as part of the forgiveness application so that the government can better understand lending practices as it relates to PPP loans. There were some concerns among lawmakers about whether minority business owners received less favorable treatment. So that is one big concern. And then there are the concerns about accountability moving forward.
So let's talk about accountability. In July, the Treasury Department released their database of those companies that got really large loans. These are loans ranging from $150,000 to $10 million. And the first thing that stuck out to you is something I might have missed. Tell me about Head to Toe.
Yeah, Head to Toe is an example of a business that just raised eyebrows among a lot of people in the community because we had covered it for a couple of years now. They are a clinic that receives state money to serve disabled children. Bottom line is, the state was investigating them. They were basically on probation. Their contract had been suspended. There were several initial findings of fraud, and yet they got a loan of up to $1 million.
And so, we get this database of more than 11,000 companies, and I guess you must just be scrolling through it, and something is like a big red flag that jumps out to you. Head to Toe received what?
Right. I mean, I'm looking, and here's this company that I've spent so many hours investigating that has wrecked lives of so many therapists who went into debt and were late on bills and had kicked out of apartments because they didn't get their checks for all the work they had done for Head to Toe.
Therapists across the board experienced the same thing. People were not getting paid for months and months.
And when we went to them to say, all right, how many people are you keeping on your payroll for this? They wouldn't tell us an amount. They won't tell if it's 2 or 10 or 20. And so they're not being very transparent with us at all.
The next thing that I know that stood out to you right away in the data was the issue of the number of schools that were getting this, and specifically charter schools. Why did that stick out to you?
Well, look, Arizona has more charter schools per capita than any other state. And these are private companies. They deliver public education using public dollars. So immediately there was a question about why charter schools would even need a PPP loan, because they get per pupil funding, just like traditional public school districts. And that formula didn't change during COVID-19. It didn't go down 1 penny.
Even though all schools face a lot of uncertainties going into next year, there's a question about why these particular charter schools felt that they needed to get PPP money. Charter schools were held mostly financially harmless as far as we know.
In fact, charter schools received a minimum of $50,000 from the CARES Act. We saw more than 100 charter schools, which represent about 20% in the state, receiving anywhere from $150,000 up to $1 million of PPP money.
The whole situation with the PPP, originally I thought it was to basically a restaurant bailout. You could have gone hair salons, restaurant, anything that needed to close down, but a charter school.
We did speak to one that legacy schools, several legacy charter schools received money. They were one of the big takers of this. They did tell us that, look, they had to stop their before and after school programs during COVID-19. They also lost out money on potential fundraising, and that's why they said they were justified in getting the PPP money.
But there's also the question of comparing them to other schools. So public schools weren't able to get PPP money, right? So does that worsen the education gap?
You could argue that that does widen the gap between traditional public school districts and charter schools. There's a perception among many who are public school district advocates that there already is some disparity with what public schools are able to do money-wise. They have to go out and beg voters to pass bonds for certain things, and what charter schools get. The charter school community will say, no, it's the opposite. They actually end up getting more per pupil than we do. But at the end of the day, you had public school districts who did not have an opportunity to get this. And if you look at, say, one school, we looked at two in Mesa that were just right down the road from each other. One got, I think, up to $250,000, which goes a long way in one school of what you could do with that. The other, in the school district there, didn't have the chance to even apply. And you got a parent there saying, man, that would have been nice.
With public schools, I mean, I would hope that they would be able to get the same type of opportunity with COVID and everything to have that fun.
You know, there are big questions about the types of charter schools that got these and whether there was truly a need or whether this is just padding profits.
Just getting this data to even start looking at that, I didn't know if we were going to be able to get that back in April and May. And just talk a little bit about some of the limitations.
Yeah, so for example, we don't know the names of any companies that got less than $150,000, even though they make up the vast majority of companies that did get PPP money. And then in addition, what is available in the data, it's just ranges of money. We do know that in Arizona, more than 11,000 businesses got loans more than $150,000. Of those 11,000, 860 got $1 to $2 million, okay? Another 400 businesses received $2 to $5 million. And then there were 58 companies in Arizona that were the big winners, so to speak. They got loans from the $5 to $10 million range.
So you started to really dig into those companies as well. And what were some of the things you found?
So we found, for example, a businessman out of Paradise Valley named Ronald Brown who runs a company called Atrium and several other companies with Atrium in their names. And they're all tied to the hotel industry. So we went to try to talk to him about getting these loans. And we were, for lack of better words, unsuccessful.
We can't get him to respond to us. Could you?
I gave him your card, and I told him you were here, but he said he was going to be in meetings.
We're trying to do our job as journalists to ask these people who have received this money to just give us a basic explanation of how it's being spent.
At the end of the day, these are not just $5 to $10 million. There were multiple loans, I think even two in the $5 to $10 million range.
Yeah, so for example, Atrium ended up getting several different loans, the Atrium companies, I think possibly upwards of 35 million. We don't know exactly again. And so they laid off more than 200 people in Arizona alone at two different hotels here. One is the Renaissance up at near the Cardinals Stadium in Glendale. So we know some of those hotels are running with skeleton crews. The question is that we just would like to ask them and Mr. Brown is, okay, so is this money going to rehire people? Did you use it for that purpose? Are you using it to retain employees, and how many employees are you retaining with this?
So we know that this pandemic's not over. What do we know is going to change?
Something that Republicans have actually proposed is to limit those eligible to companies of 300 employees or fewer, and to add more restrictions about proving hardship so that companies have more of a burden to really show that they've lost money during this time. And something else to look out for, I think, is just whether government watchdogs will go in and try to criminally prosecute any companies that have taken advantage of this. The question is how much effort the federal government will actually put into finding fraudulent applications and prosecuting them.
The lesser issue as opposed to prosecution would be that some businesses have to pay the loans back.
Sure, that would be the first remedy if businesses are held to account, is pay the loan back. The application process has already started for businesses to now apply to not pay their loans back. And so they are expected to show why they deserve to keep the forgivable loans.
It sounds like this is a huge lifeline for a lot of businesses, especially the small businesses you talk to. Thank you so much for your reporting.
Great, thank you.